Hello, everybody. Welcome to another episode of Simply Bitcoin IRL. Today, we have a very special guest. We have Bob Burnett. He is the CEO of Barefoot Mining, and I believe an investor in Ocean, which we're going to talk about as well. They threw this amazing event a couple weeks ago, a month ago. I had the privilege to be able to attend, so I'm really excited to talk to Bob about that. But before we start the show, I do want to give a shout out to the Bitcoin company that makes this show possible. Of course, I'm talking about Swan Bitcoin. Swan Bitcoin is the best place to build your Bitcoin stack. It's being built by a very, very passionate group of Bitcoiners. So it's built by Bitcoiners. It's for Bitcoiners. Check out Swan. I highly recommend it. That's where I build my Bitcoin stack. Check out swanbitcoin.com today. All right, let me bring up Bob. Bob, we've crossed paths over these last couple weeks many, many times. And I'm so happy to have you at my wedding, you and your wife, who I don't know why I didn't know this, but your wife is also a Bitcoin star, for anyone who knows anything about the Bitcoin trading cards. So how you doing, man? How's life?
I'm doing great. Lola and I were honored and so happy to be at your and Sophie's wedding. It was a real treat. We're so happy for you guys. So, that first and foremost, that's the most important thing, right? There are very few things bigger than Bitcoin, but one of them is family. So family and friends, that comes first. Bitcoin comes second. So.
100%. Well, no, the honor was truly ours. We really, really appreciate you guys coming. Okay, Bob, there's been so many incredible presentations that I've had the privilege to be able to see and attend. One of them was at the Ocean event. And that's really when you exposed me, that you did this incredible presentation the first time, the way that you broke it down. And the way you broke it down is that there's really three types of miners, right? There's three subsects. There's the hares, the rabbits, there's the horses, the wild horses and the captured horses. And then there are the elephants. And it was such an interesting way of just kind of describing the mining space. So for anyone who hasn't seen that presentation, anyone who hasn't, isn't familiar with those categories and those terms, could you explain to everybody what rabbits are, what horses are, and what elephants are?
Sure. The genesis of coming up with that was as Barefoot was kind of getting started, we were evolving. There was a point where we had to decide what we wanted to be. And most of the mining industry is geared toward being big and trying to get big quickly. And as I looked at that, I had some concerns. They're best exemplified in an article I did called Satoshi's Heel, which is in Bitcoin Magazine. But the concept of elephant is very classic, right? You read press releases frequently about company X or company Y. They're building 100 megawatts here or 300 megawatts there. These sites, they're big and powerful, right? I mean, that's what an elephant is. An elephant is a big and powerful beast. But they take a long time to grow, right? An elephant doesn't grow overnight. So there's a long lead time. If you look at it as a business person, you can say, hey, from the moment you start deploying capital to the moment that you start mining, there's a big gap. And there's a lot of things in the Bitcoin world that can change because these sites might take 15 months to develop. The other thing about elephants is they're very easy to find, meaning they're very easy to hunt. And maybe we'll talk a little bit about the Elizabeth Warren, the Digital Asset Anti-Money Laundering Act and the attacks coming. But I think it is a lot easier to attack an elephant and to hunt them. And because there are fewer of them, the ability to hunt them into extinction is probably higher. Now, on the other end of the spectrum, we have the rabbits. The rabbits are, they could think of them as the individual miners, the home miners. They're the plebs out there Individually, they may have an S17 in their garage or a couple S19s out in a shed. Individually, they're not very important, but collectively, they are very important. At least they could be, right? So if you think about one rabbit in a farmer's field, no big deal, right? A whole bunch of rabbits in a farmer's field, that's a big problem, at least for the farmer, right? And the other thing about rabbits, though, is if you start hunting rabbits, they can scatter and hide very quickly. So if a farmer has 300 rabbits in a field and he goes and shoots one, the other 299 are going to hide real quickly. And so they're there at the other end of the spectrum. The horses sit in the middle. The horses are the small to medium-sized commercial operations. They might be in kilowatts, like a couple hundred kilowatts to a few megawatts. You might see them being a dozen servers to several hundred servers, but they're kind of in that spot. Done properly, they're scattered all over the place. They're also very hard to find. They're also typically built in a mobile fashion. So unlike the elephants, if somebody starts hunting wild horses, they can go and hide pretty quickly. That, by the way, is what Barefoot decided to do. We said, hey, we want to develop horse class sites. That doesn't mean we don't want to have a lot of sites and a lot of hash power. It just means we want to have a lot of sites. We'd rather, one of the things I've said is, hey, if you said, Bob, you can have one 100 megawatt site, or you could have 52 megawatt sites, I'll take the 52 megawatt sites. Now, a lot of my compatriots at some of the bigger companies would say that's insanity. But I believe wholeheartedly that when you factor in all the risk variables and the ROIs, that it's the better path. Now, each of those site sizes can either be captive or wild. And I was telling Nico earlier, when I first started this, I was thinking about energy, but I realized later on, as it was developing, that it's not just about energy. So if we think of a captive site, what I mean by a captive site or a captive company is one that gets its energy from somebody else. It requires the permission of a third party to exist. By the way, a very un-Bitcoin thing, like a very unlike Bitcoin thing, it means that you're not self-sovereign, right? So if you're a captive elephant, you have this massive site that is essentially useless if somebody else decides to not grant you permission for the energy. And you can have all the contracts you want and all the affirmations, but really it just takes Elizabeth Warren getting one bill through and you're cooked. The Biden energy tax on mining that was attempted last spring, it just takes one of those to get through. But captive means other things too. Captive can mean regulatory capture, where you have auditors and regulators that oversee what you do and have to approve changes in your company. Those are also substantive risks. So wild mining means, hey, you control the energy source. You're the one generating the energy. And short of somebody pointing a gun at your head and saying, turn it off, they can't be done. And by the way, they have to find you to begin with, right? So, but it also means being free from, as much as possible, from the regulators and the auditors. So at Barefoot, we choose to be free. We as much as possible, we do wild mining. We do have some captive, but we love wild mining, and we love doing it in this horse class site to kind of stay under the radar.
And I was very fortunate enough to be able to visit one of these sites, and it was absolutely incredible. It was an old factory, right? That you guys converted. You put a turbine in there. In my memory, I'm totally gonna say the story because it makes me giddy. It was Bob, Jimmy Song, and Jack Dorsey, and you guys are all looking to the turbine, and I'm just like, looking at you guys and looking at the room, I'm like, this is incredible. Where am I? This is so cool. But could you describe the site, Bob, to everyone? Because I think they would really appreciate, it's like, yes, this is a wild horse site, but what does that mean? So could you describe this site? Why is it special? The fact that it's it's not connected to the grid. Yeah.
Yeah. Well, first of all, I'm glad you enjoyed that. And, that was a treat to be able to, I'll explain kind of how this system works to everybody, but it was a lot of fun to be able to, I actually took Jack to the top of the whole system and walked him through and explained it to him. And then, as you said, we got to the bottom where the turbine was actually spinning in the generator, and to be able to, witness it and feel it with Jack and Jimmy was pretty special for me too. So the story behind this site was several years ago. I guess it was 3 years ago now. I was looking for wild energy. Like, what could I do? How can I implement this? And through a friend of a friend, I found out about this site in South Carolina, which was a textile mill that had been built in 1888. And the textile mill had not worked for 20 plus years. I think it was in the year 2000 or 2001 it had shut down. What was unique about the textile mill, though, was, back in that time frame, if you go back 120 years or so, what you'll find was, well, there was no electrical grid, right? If you wanted electricity or you wanted power, actually started pre-electricity. They first used this system to drive like looms. It was a textile mill. So weaving fabric using the power of a river. And then in the early 1900s, it got converted to electricity. Well, it hadn't worked for a long time. It was in great disrepair. However, the dam was still working properly. And some of the guts were still working properly. So it took some vision, it took some money, and it took some blood, sweat, and tears. But what we did was we rehabilitated that whole infrastructure from what's called the head of the dam, which is kind of up where the water is, right at the top of the dam, down into the powerhouse, which is where the generators and the turbines are. And we rebuilt that whole infrastructure. And then we had an interesting choice, and it kind of really goes into this philosophical thing that I've talked about a little bit too, which is we had the choice that if the facility was producing extra energy, we could tie back into the grid and sell that energy back. We made the choice to cut that cord, though. It actually existed, and we cut it because we wanted to be wild. We wanted to be free, and we didn't want to give any regulatory authority the possibility of saying you have to redirect your energy, because we're in it to mine Bitcoin. And so we're probably at certain times forgoing a little bit of revenue by not selling the energy back to the grid. But we think that the independence that we gain is a lot more important.
Gotcha. No, and I agree. And this is perfect. This is a great time to talk about this, right? Let's talk about essentially the regulatory hostility that has been really, really manifesting itself as we get closer to this, this spot ETF, and the series of events. And Bob, we because we do like a daily news show, we cover these things, and we've been seeing this from a mile away. Just the strategic moves that Elizabeth Warren and co have been making. First, a Wall Street Journal article that led to the FinCEN, not to mention Operation Choke Point 2.0 that's been happening, earlier on the year. Caitlin Long's bank was denied a week after they announced the American version of the central bank digital currency, the Fed now. So lots of coincidences, to say the least, not to mention, go ahead.
Oh, I should say amazing coincidences, aren't they?
Such coincidences, not to mention all the reports coming out of the Treasury, coming out of the White House. In the Presidential Economic Report this year, they dedicated 20 entire pages as to making the case why a central bank digital currency is necessary, why you need a state for money, and why Bitcoin is a bad idea, right? And why central banking is actually a good thing. So the writing's been on the wall, but it really wasn't until the Wall Street Journal article dropped and they were caught red-handed, essentially lying. Like the data was manipulated, but you can tell that it was a strategic move. If not, I would describe it a surgical move, because she just went on a media blitz after that. And Bob, I swear to God, I remember we were streaming the DOJ press conference of Binance, right?
Okay.
And this is when I knew. They mentioned the word terrorism 25 times. And I remember, and Opti was like listening in it, and we were streaming the Swan Spaces, and my voice broke, and I said, they're going to try to ban self-custody in the United States of America. I saw the writing on the wall. And then a week later is when you see Jamie Dimon testifying in front of Congress. That's when you see Elizabeth Warren, gathering more and more support for this bill. She has up to 20 senators now. So when you talk about that regulatory risk, it's real, and it's coming, and it's going to intensify, because I think people don't understand what the significance is if Bitcoin succeeds. This is the separation of money and state after all. How did you know that? How did you know that like from miles away? How did you know that even if you create jobs, even if you check all the boxes, even if you support the right politicians, how did you know, like on a fundamental level, that they're just not going to be okay with this? And of course, it's not all of them, but they're not just going to be okay with this thing. How did you know that?
Well, there's two reasons. The first reason is that you mentioned it. We threaten the wealth infrastructure of the world and the power infrastructure of the world, and they won't go lightly. So that's the first reason. But the second, I talked about this a little bit in South Carolina at the event, and also at Unconfiscatable. But one of the things I try to do is look at everything through really long-term lenses. So I look at Bitcoin from the lens that we want to build a monetary system that will last for 1,000 years. And so if what you do is you then look at, like I look at my company and I look at what I'm trying to do, is I have to build something that will resist the threats over 1,000 years. Well, over a 1,000-year window, it's very easy to see that these threats will come. It would be impossible for me to say, well, that I knew that Elizabeth Warren was going to do this in December of 2023, but I did know with essentially 100% probability over an extended period of time this would come. So I think that's the big thing. Bitcoiners, I don't mean to diminish the importance of some of the things that maybe are happening positively. I mean, we have the halving, we have hopefully I shouldn't say, who knows, I'm not sure, but we have the ETF coming, we have these sort of things coming, but those are really short-term things. I think what we have to do is, think about where we're going in the long run. We have to build that immunity. So, as an older guy, I know I won't live to the end of Bitcoin. But what I do want to build is, to the best of my ability at a personal level, a world that has Bitcoin, that allows my kids and my grandkids a chance at a free and fair society. And without sound money, we don't have that, right? And if not only sound money, but a monetary system that is free and uncensored, right? I mean, those things have to go together. I think we forget that sometimes. We talk about, Bitcoin is not only money, sound money, but it is a monetary system. And we have to maintain the purity of all those things. But, at the end of the day, the reason I had this was because I look at the long term. I don't trust any of those people, by the way, either.
Yeah, no, and
Excuse me.
it's an interesting. You're looking on a 1,000 year time scale, and this is where the conversation about the rabbits and the horses and the elephants becomes very very interesting, because if you look at it, if you zoom out from that perspective, the elephants are all going to be captured or dead. And some of the horses are going to be casualties as well. The rabbits are always going to do what rabbits do, but it's clear to me that the future of Bitcoin mining is wild horses, right? And another thing that gets me extremely excited, Bob, and Tarantula is really pushing this forward, is and this is all over the world. This isn't just happening in the US, right?
Yeah.
Where you go to these like in the middle of nowhere oil fields, right? Or gas fields, and they just have all this bent up stranded energy. It's way too far away from anything for it to be economic until Bitcoin.
Right.
And that's just ready. It's just waiting for it to be tapped. I see that as an industry that hasn't even begun yet. Am I wrong to say that?
No, you're nuts on, and it's critical. I again refer to the article I wrote, Satoshi's Heel, which illustrates an unlikely circumstance where the world becomes all captive elephants, and then the existential risk that comes from that and the mathematics behind that. But we can 100% prevent it simply by having some balance in the ecosystem, right? So if you think of Bitcoin as a living, breathing thing, and kind of especially the mining infrastructure as something that must follow that. Well, you can't have in the real world, you can't have all elephants, right? I mean, you have to have predators and prey and a whole chain of hierarchy in those animals and the same things. And like they always say, like if the nuclear bomb comes and blows everything up, what lives? It's probably the rats and the cockroaches, right? So the rabbits are kind of like that, and I say that in the most respectful manner, right? Like you gotta preserve them, because if you didn't, then life would cease to exist. Um, so actually, I kind of lost my train of thought there, Nico. Where were we going?
We were going, I don't know, I'm just so fascinated about the conversation, but essentially we were talking about this idea that that the future is wild horses. I was theorizing that,
Well,
and I was talking about
oh,
tarantula
right.
and the oil fields and all
Yeah.
that.
Yeah. So first is there's this massive amount of energy spread all over the world, as you've illustrated, and it's stranded gas, it's hydro, it's biomass. By the way, that's another big one. Whether that's waste sites or human excrement or pig farms or whatever, but there's a whole bunch of energy out there that can't practically ever be utilized on a large scale. There's no way to economically ever tie that into the grid, but obviously we provide a solution to utilize that energy, and it not only makes use of that energy, but it doubles as building out this wild infrastructure. So, as I said, in my mathematics, we really need a minimum of 15% of the infrastructure as wild, but 30 would be way better. And there's a vector right now toward the big elephants, right? Toward the captive elephants that's not healthy. And we're a long way from hitting these numbers, but it can creep up pretty quickly, right? We could, if we lose 5 or 10% a year, I think most people probably understand the power of compounding. Well, that can get away from you very quickly. So that's my fear. That's what we have to build out. But there's phenomenal opportunity. I can say for us at Barefoot, in 2023 we expanded a lot. To be honest, we did a fair amount of it on grid. We had some very easy opportunities, so those are captured from a grid standpoint, but we build them out. But 2024 for us is going to be the year of wild site development. So
Oh
we've
yeah.
got several several additional sites that we're working on. By the way, it's hard. I mean, that they don't all make it to the finish line. Like, there's a lot of stuff that goes wrong, and so you know, we'll probably start 4 to 8 of them, and maybe 50% of them get to the finish line next
Oh,
year.
wow. Why such a, like, what is it? Is it because, like, why is the
Well,
number? Go ahead.
well, because, well, when it's hard, I mean, that, like, some of it's deals. Like, I'll talk stranded gas for a minute. Okay, so there's flared gas and stranded gas. Like what Tarantula's doing with, you know, he does a lot of flared gas stuff. Wonderful stuff, right? I applaud him. Let's say stranded gas, though. Let's say, like, we've done a lot of looking in the Marcellus Basin. The Marcellus Basin is a massive natural gas deposit, West Virginia, Pennsylvania, and parts of Ohio. Okay, so there's this massive piece up there. We're exploring several deals in that area right now. But what this is what they constitute. We find somebody who has land that sits on top of the natural gas deposit. Ideally, they already have a well drilled, and a lot of people have done that. However, they may be 20, 30, 50 miles away from a pipeline. So that piece of never being economically able to withdraw that gas from the ground and get it to an endpoint is very real, right? Because to get to a pipeline, it may cost like $1 million a mile in piping and infrastructure. Wow. And they may have to go through 20 or 50 landowners getting permission, right? So it's never going to happen, right? So then we come in and we say, hey, let's cut a deal, right? So the deal can work one of two ways. The deal can be, well, do you guys want to own part of the entity that we're developing? But most of these are not Bitcoiners, right? You know, so they say, no, I want you to pay me for the gas. Okay, but we don't want to pay market rate for the gas, right? Because it's stranded and we're trying to hit a price point. So then in most of these deals, and I've learned more about this than I ever wanted to know, but I'm still not an expert by any means. It turns out that when you pull gas out of the ground, even though you, like this landowner that we're dealing with, he has to share that money with a whole bunch of other people who essentially his neighbors he has to share the money with.
Really? I didn't know that.
Yeah. So because, you know, if you think about it, so you think about this big bubble of gas underneath, right? So if one guy sits there and pulls all the gas out of the ground and these other guys never get any, it's not fair to them. So where these things fall apart is usually not the ability to technically implement. So it's usually in the deal making stage and something goes wrong. And it turns out that you have to share. So there's the rights to the gas that's shared. And then sometimes there's a different person who has what's called the surface rights. So then you have to have a lease with them to do all that sort of stuff. And then you do have to get, like, it depends on where you are and what you're doing, but you may have to get an EPA or a state regulator to approve that you're not doing it in a way that creates an ecological problem. Obviously, we don't like that if we can get away with it, because we'd rather them not know we're there, but it depends on where we are. So anyway, those are some of the reasons why they don't all make it to the finish line.
Gotcha. So it's essentially the human element, human element that sometimes is not as dependable, so to speak. So, okay. So you find this site, right? You find this site. What is it? And then let's say, you know, everyone is happy. You got the deal signed. What is the next step, right? Like, how do you build this, this sweet Satoshi generator in the middle of nowhere from scratch?
Well, in this case, like if we take the case of stranded gas, if we have a site that has an existing well, it's often capped. Um, and so we sign some sort of uh, letter of intent or memorandum of understanding, an MOU, one of these sort of documents. Okay, well, we're locked in. Now, what we'll do is we'll quickly put together a budget, a capital budget, and a pro forma, like how much will it take to operate this site on a monthly basis, based on the capital we deploy. What machines are we picking? Are we picking S21s or S19Ks or S19XPs or M30s or whatever it is we pick, right? We got to pay for those. We've built a fairly sophisticated model to try to predict Bitcoin output over an extended period. Like all models, it's not perfect, but it's pretty good because we have to forecast global hash rate, we have to forecast the price of Bitcoin. All these sort of things have a material impact on what we're doing, and of course, fees now are becoming a huge piece of that modeling. Modeling fees in on the miner revenue thing is becoming wild. So then what we typically do, unless we have the funds available at the time to do it all ourselves, which is we've done a lot of these, so we've got our money kind of spread out right now. We typically go and we start raising money, and we'll bring in a group of investors. It's usually a group of 3 to 8 people or organizations that fund it. And then because we're a horse class site, we're usually trying to target, like on a wild site, we're trying to target maybe a 4 or 5 month maximum from the time the investment comes in to the time that we're producing. And, we love the 6 to 8 week ones, which if all the stars align, sometimes that will happen. We did a couple this year in under a month, but they were on grid, which is a little less complicated, but we did them as fast as horse class sites and as fast as 4 weeks this year.
That's incredible. So the name is so fitting. The name Barefoot, but yes, I love it. It's so cool. So Bob, you've said in the past, also fascinating when you talk about this, that Bitcoin block space will be the most precious real estate in the world. What do you mean by that?
Yeah, I think people are starting to see some physical signs of what I've been trying to.
Yeah, absolutely.
But so first of all, if I can hat tip to Satoshi one more time, you can't do that enough, right? Satoshi obviously created Bitcoin, and he created this concept of absolute scarcity, which in reality had never existed before. And I think the community largely thinks about it as the 21 million Bitcoin. But there is a second absolute scarcity that he created, and that's block space. Now, in one perspective, you can say, well, isn't block space infinite? Every 10 minutes, there's more. Yes. However, it is not reusable, right? So once block space is created, it gets used one time and that's it. So if you give me any period of time, you say, hey, Bob, how much block space is available in the next week or the next month or the next 10 years? I can tell you with almost exact certainty exactly how much block space there is. We know that roughly it's actually just under 10 minutes is the mean block time of the network, about 9 minutes and 49 seconds in the last year. And we know that the block size is 4 million weight units. We know that on average right now, about 3,000 transactions are in the 4 million weight units of the block space. And so we can extrapolate and say, hey, there's about 53,000 blocks per year. And by the way, that number, the tolerance on that number is probably a couple hundred either way. That's it, right? 53,000. We know that there's 3,000 transactions per block. Do the math. That's about 150 million transactions per year. Access to those 150 million transactions is shared by the 8 billion people of the world, and the 330 million companies of the world. Now, that math alone should tell you that we're headed toward an absolute collision, right, of scarcity, because there's very little that can be done to increase that 150 million. Now there's some things, like I could say, well, if I owe money to 2 people, instead of doing 2 transactions, I'm only going to do 1. Right now I might get sloppy with it. I think there will be some things. I had a little Twitter exchange with Rockstar recently about that, and there's some faith that the coders of the world will figure out some ways to make transactions more compact and all that. But let's just say even they go nuts and they figure out how to get us to 500 million transactions on an annual basis. And by the way, that's probably a long way off getting to that point. If there's 8 billion people in the world and 10% of them start living in a Bitcoin world, even 5% of them, actually, that's a better number. Let's say 5% of 8 billion people is 400 million people. What does that mean? That means there's an opportunity for each individual of the world to do 1 base layer interaction per year. That's it. Now, what about the 330 million companies, though? If you see 5% of them on that standard, companies are not going to do 1 Bitcoin transaction per year. They're going to do a whole multiple. So we have this scarcity situation playing out. If you think about scarcity, it's a greatly misunderstood phenomenon, because it typically has never truly existed. Anything that is in demand has almost always had an ability for the supply side to respond. We talk about that with Bitcoin, frequently, but this is true in block space too. There really is no way for the block space to respond to an increase in demand. So I give this example that I think may help people a little bit. Imagine there's an apple tree that produces 100 apples per day, every day. And there is demand for 95 apples every day at some point in time. Okay. Well, the apples from the apple grower are probably really, really cheap, right? He's throwing 5 apples away a day. The moment 101 people want apples, the price of apples will start to skyrocket. It doesn't, so in other words, simply the addition of 6 apples of demand takes it from almost free to now being something that is seeing the price go up. As soon as you have 150 or 200 people wanting apples every day, it's stratospheric. So what does that mean? It means that scarcity is a nonlinear function. It means there's exponential explosion in the price of that commodity as soon as demand cannot be met by supply. I believe for the last year, I use that 95 apple thing very specifically. What we've sat on is a situation where a normal day over the last year has been around 95 apples. But we've seen spikes where we taste 101 apples of demand. We're kind of just going through one right now. We had one in the spring. We had another one, I think it was in the late summer, where, boom. And so what happened? Fees didn't go up, 50%. Fees went up like 20 times, 100 times. And that's that scarcity in action. And by the way, guys, we're still at a point with well under 1% adoption. So that block space and by the way, I believe in 2024, we will see, instead of kind of these peaks and valleys, we're just going to hit a steady state where it's expensive, and then it'll just keep getting more expensive from there forward. I don't really see relief.
Yeah, and and a lot of people they feel certain ways about this. And the reason that they feel certain ways about this is, first of all, the second layer solutions, you know, and then me and Opti just went through this personally where we're trying to essentially set up like a lightning backend for, you know, for the Simply Bitcoin store, and, you know, I have a start 9 and the whole infrastructure, whatever. And I'm a media guy and I have 2 jobs. I have to work for Swan. I have to work for Simply. I do not have time. Like, I can figure it out. I can go to my buddy Ben's channel and like, okay, I'm going to set up a lightning wallet, right? We're completely sovereign, and I'm going to, you know, it's self custodial, all that stuff. But I just don't, like, I don't have time for it. And I remember I was telling Opti and our CEO, Weinekis, and I was like, Lightning, I'm going to get murdered, but I'm going to say it anyways. Lightning sucks right now. It's not easy to use for the average everyday person. That's not to say I can't figure it out. It's just, it is not a turnkey solution right now. So what are your thoughts on second layers? Because in my opinion, I think they need a lot of work. You know, and I know Wallet of Satoshi did a great job for a long time, but then they got freaked out with that DOJ press conference, right? So what are your thoughts on second layer solutions from the case that you're making? And I completely agree with you. I might add, they're necessary, but what are your thoughts on them?
Well, they are absolutely necessary. Bitcoin doesn't work without them. Wallet of Satoshi was a big loss for those of us in the US. I obviously still have it on my phone, but I loved it. I used it a lot. As an individual, I think that works. Obviously, at a commercial level, if you're trying to set up a company store or something, that you know, you're going to need something more robust. But I see a massive amount of activity. I agree with you that we're not there yet. I am a little worried about a disjoint here, like how fast, because if my prediction is right, let's say that, you know, by the end of next year, base layer interactions are really expensive. I mean, they're always going to be available, but you're going to have to pay for it. And we can come back to that a little bit, and you know, what does the subsidy mean? But whether it's Lightning, Fedi, Liquid, we probably need several of these going. We need a massive amount of attention. You know, I said this, if I was a young person, I had some skills in coding or business development or something like that, I would jump on Lightning like crazy. You know, if somebody's out there looking for a place to find their way in the world, you know, jump in. There's so much opportunity there. But I am worried. I am worried a little bit about that disjoint, because I think it could create, it won't stop Bitcoin in the long run, but it could make this next wave of adoption restricted, that we scare some people off because that piece isn't ready yet, and then they look at the fees, you know, and I think we also have to change some of the, this is where it gets hard, right? This is maybe where I get slammed. Nico, you said you get slammed. It's going to be really difficult to say not your keys, not your Bitcoin to everybody. Now, I'm not saying everybody to go buy the BlackRock ETF, but you know, we're going to have to find trusted second layer solutions for people and custodial, because if you go back to that example, 5% of the world being on Bitcoin is 400 million people. That is over 2x the current capacity of the network, meaning that at the current, if we had 5% of the world adopting Bitcoin at the current level, then once every 2 years, each person could do one base layer interaction. So that's not going to work, obviously, right? So something has to give at the second layer. Those people that are looking at Bitcoin as more a store of value, that may be finding some sort of trusted custodial solution. I know that's somewhat sacrilegious, but I don't know. I don't have another answer. That may be with a Swan or somebody like that. I'm a full disclosure, I am a Swan investor as well. So, but hopefully there will be others, not necessarily traditional exchanges, but others that we can trust with at least some of our stack. But at the end of the day, you've pointed out, a concern.
And it's not only so it's not so like you can say it's hypothetical, you can make that argument. It's something that I've experienced, and then after listening to your presentations and just the way that you describe it in terms of the Apple example, I think is phenomenal. Yeah, I mean, it's obvious. It's very obvious where this is going. And in look, I maybe this sounds very privileged, but I don't care paying $100. I don't care paying $100 for my fee if I get the benefits of Bitcoin. But at the same time, I also acknowledge the fact that that's a very, very privileged stance, and I think people have been their experience of Bitcoin for all these years has been, if they really wanted to, they can, buy a coffee with it. And I think, as we're seeing this institutional adoption, they're starting to release all these commercials. Wall Street is investing money in the marketing of Bitcoin, which is just nuts. There could be a reality where you're just priced out fee wise. And you should definitely be consolidating, ladies and gentlemen. I got to say that too.
Yeah.
But yeah, I mean, I could see a lot of people react negatively to that in a way. They could say that, Bitcoin is money for the privileged elite in a way. And what would your response to that be?
You wish there was a Bitcoin PR group, right? So that we could work on creating the right messaging and the positioning. But I think the answer is the Bitcoin ecosystem, which includes all the layer 2 stuff, is set up to do that. But layer 1, you said it earlier, that real estate is the most precious real estate in the world. It's not real estate that's meant for coffee transactions. And it's also not meant for people DCAing, $2 of Bitcoin a day. It is the world's most secure and trusted digital network. And that comes with a price. I mentioned earlier subsidy, right? So I think most people are probably familiar with the subsidy, the block subsidy, which is currently 6.25, and we're going to celebrate the halving in 4 months or so. And I think a lot of people think about that as a subsidy for the miners. But that's a misnomer. And in my opinion, that the subsidy was a subsidy for all of us. It was for all of us as users of Bitcoin and champions of Bitcoin to use this period of time where fees were very low, to get comfortable with the base layer, to be in a position where we can evangelize it, and also time for these layer 2s to develop. So the subsidy is essentially over. Another ways I like to say it is the free ride is basically over now. We've had 15 years to interact with the base layer whenever we want for essentially free. And that's a phenomenal, that's a phenomenal privilege. And now we're at a point where you have to pay. It's like anything else. You may sign up for a new gym, like we're starting the new year, right? And so people will go sign up at a new gym and they get the first 2 months at 75% off, and then you have to pay the full price, right? So Bitcoin is the same way, I think. And so we have to look at that. I think it is hard. It's been there and available for everybody for 15 years. There's a certain reality that people who are late to the game will get less of the benefit of the subsidy because they're getting in late. It's just the way it is. Now what you feel badly for, like my wife Lola, we mentioned, she's from the Philippines. Philippines, a country of about 110 million people, 50% of the population lives on $2 a day or less. There's several other countries in the world like that. It's ideal for Bitcoin. They're not adopting it at the rate that we'd like to see. In fact, Lola and I are hoping to get there this spring, and we'll do some evangelizing and education in the Philippines while we're there. But you know, that's the part that bothers me. But I don't have an answer for it. There's no good answer for it other than you hope they get on fast, and that as you said before, that lightning gets there and comes up the curve quicker because they're going to really need it.
Yeah, 100%, and that window is closing fast. You know, we've had the way that you said it, it was beautiful. We've had 15 years, right? Not only cheap fees, but 15 years to front run Wall Street. You know, we had a bunch of time to front run, you know, the first billionaire going absolutely bananas and just, you know, buying it. But that window is slowly closing. You know, and I think there's been so many signs all over the place to kind of point to this. You know, and I agree. I think 2024, not only fee wise, but also, you know, you're no longer front running Wall Street. Wall Street's right there with you, right?
Yep.
And they're gonna want to get a good deal, right? So, anyways, we have about 7 minutes left, Bob, and there's been something really interesting that you've said in the past, and it's this scenario. It's this potential scenario in a world of only captured elephants, and a type of attack that governments could do, that could put governments, nation states, you know, whatever you want to call it, that could potentially do to the Bitcoin network, where they control a massive amount of the hash rate and then they shut it off all at once. So could you describe that hypothetical attack, just so that, you know, if you're looking to get into mining, you know, you could be a rabbit right now with an S9. They're pretty cheap these days. So what are your thoughts, Bob?
Yeah. So this is something I call Satoshi's heel. I want to start by stating that it is, number one, a situation that we can 100% avoid simply by having ecosystem diversity. And number two, even with that, in any short-term window, it's a low probability. But put your 1,000-year hat on and say, well, if this scenario I'm going to talk about has, let's say, a 0.1% chance in any given year, then over a 1,000-year period, it's highly likely to happen, right? So now the scenario is this. Imagine a world, it's in the future. 99% of all the hash rate is with captured elephants. And let's say it's even been that way for several years. The rabbits and the horses have been largely dead for a long time. So in other words, there's not hash rate sitting on the sidelines. There's not S9s collecting dust in somebody's garage. We're past that point. At the point of a difficulty adjustment, the governments of the world at that point, maybe there's only even one world government. In other words, throw away your thoughts about the US and China and all that sort of stuff. They may not even exist. A coordinated effort shuts down all of the captive elephants simultaneously. And not just simultaneously, but in a calculated manner. They do it right at the point of a difficulty adjustment. So for those of you not familiar with it, Bitcoin adjusts its difficulty every 2016 blocks. And it resets the difficulty with the expectation of trying to keep the mean or average block time right around the 10-minute mark. So, however, it's a backward looking system. So if what happens is right at the point of a difficulty adjustment happening, the algorithm thinks there's all this hash rate there, but now suddenly it disappears, and now only 1% of the hash rate remains. The stealth rabbits kind of scattered out all over the world. What that would mean was block times, instead of being 10 minutes, would now be around 18 hours. And additionally, there's really no way outside of a hard fork of accelerating the 2016 blocks. So meaning we have to slug through 18-hour block times for 2016 blocks. If you do that math, you'll find it's just short of 4 years. So what would happen in that case is that Bitcoin would essentially ground to a halt. It would be no base layer interactions. After a short period of time, even the layer twos would be impacted, because, for instance, like in Lightning, you couldn't open new channels, you couldn't close channels, you couldn't splice channels, you couldn't do any of that sort of stuff. It would just absolutely halt. Now, all the Bitcoin was there. Nobody's Bitcoin was stolen. The governments nobody could really say, well, you stole my Bitcoin, you seized my Bitcoin. You just shut it off and proved that the integrity of the monetary system was now impaired. No 51% attack, nothing like that. Now, let's say we slugged through the whole thing, finally get to the 4-year point and feel like, okay, well, maybe now we can get on with things. So the difficulty adjustment takes place. There is a piece in the code that says we can only make at most a 4x change in the difficulty, but it would go down by 75% then. Block times would go, I'm going off the top of my head, maybe they would get down into the 30 or 40 minute range or something on that order now. So reasonable, and stuff would start to process. But what I would do if I were the governments is I would then instantly turn all the 99% hash rate back on. And I would fly through that difficulty adjustment. It would take about 2 days. And then I would immediately turn it all off again. So what it would mean that we would go through a roughly eight-year period with something on the order of 4,100 blocks being processed or something on that order, and that's it. Oh no, excuse me, it'd be a little over 6,000 blocks processed. But I believe that would be the way to impair the network. And again, I said this is low probability. Some people have come at me and been critical, like that'll never happen, and this will happen instead, and that'll happen instead. And I said, well, I think people miss the point that, we have to be vigilant, and that people that discount these kind of scenarios are people that probably are not security experts. They're probably not network designers. They're probably not people that understand the risks. And so if something is a 0.1% risk in any year, which is what I would put this scenario at, that is an existential risk if you're trying to build 1,000-year money.
Essentially, it would be attacking the very legitimacy of the network, right? It would be attacking the it's what you said, your Bitcoin would be safe, but you're looking at it to be like, could this really be the world's financial system? Because it's at a halt right now. So it'd be attacking, its reputation, and a reputational attack is they're really, really rough, because you can't really defend yourself. You can't, as Bitcoin's the best money in the world. It's like, but it's not moving. Right. So,
Right.
Yeah. So, and the final question, Bob. So you said that it's easy to protect against this. What would you recommend? What would you say? How does the Bitcoin network protect itself from this type of potential future scenario?
Well, there are several things I think each individual can do. The first thing is if you have even a remote capability of operating a mining system yourself at even borderline profitability or maybe a slight loss, consider doing it for the network. We need the rabbits. If you can support at a little larger financial thing, if you can support, whether it's a Barefoot project or some other company out there trying to do something similar, God bless you, and do that. I would also say a lot of people invest in the stocks of the companies building the captive elephants. So ask yourself if you really support what they're doing. Nico and I offline before the meeting started, we were talking at a personal level, and I said, for me, my family comes first. My family and my close friends come first. They're the most important thing in my life. I'll make every decision in my life to make sure that harm doesn't come to them. The second most important thing in my life is Bitcoin. And so if my actions at a personal level or a business level do something that jeopardizes Bitcoin, I don't do it. And so if you're really a Bitcoiner, if you really believe, I guess consider, where is Bitcoin in your personal hierarchy when you make your decisions? Because, for instance, I'm not telling you to buy stock or not buy stock in a public mining company, but if you do, you are giving them power to build more captive elephants, and you're supporting that behavior set. So make your own decision. It's fine, but be careful. And I would say, very much watch these metrics of how much hash rate we really think is in the hands of the big guys.
Yeah, 100%. And I just want to end it with this comment. The recycling guy says, it's our network to safeguard and pass down well, said Burnett. So yes, I think it's very, very fitting. Bob, always an honor to have you on the show. Thank you so much for coming on tonight. I really, really enjoyed this conversation, and I'll be seeing you in Naples in a couple weeks in person.
Yes.
So looking forward to that.
Yes. All right. Thank you, Nico.
Thanks, Bob. All right, guys, I hope you enjoyed another episode of Simply Bitcoin IRL. We'll be back with the live show tomorrow, 12:15 p.m. Eastern Standard Time, for another episode of Simply Bitcoin Live. But until then, peace out, everybody. Have a great evening.